Let's just cut right to the chase. Your offer got rejected because you were never, ever qualified to begin with. And that's the one thing, the fundamental truth that most tax resolution companies will never, ever admit to you.
And that brings up a really big question, doesn't it? If they knew your case was pretty much doomed from the start, why on earth did they take your money?
The answer, unfortunately, is a predatory business model. It's built on selling you a very expensive and, in the end, a really heartbreaking lie. A company will charge you, anywhere from $5,000 to $15,000 for this service. They take that money right up front, knowing full well that in about 8 to 12 months, a rejection letter from the IRS is going to show up in your mailbox. And by the time it does, guess what? They're long gone. And so is your cash. What's just staggering is that it's estimated that 90% of all the offers that get rejected should never have even been filed. Their entire business model depends on you not knowing how the IRS actually works. They sell you hope and they keep you in the dark.
So let's pull back that curtain, okay? Let's look at how the IRS really makes these decisions. It's not about your sob story. It's not about sympathy. It's all about a rigid, secret formula.
And this is it. It's called the collection potential formula. And you have to understand this is completely non-negotiable. It's a cold, hard calculation that determines the absolute rock bottom minimum the IRS will even consider. Your story doesn't matter, only the numbers.
Now, on the surface, the formula seems kind of simple, right? They take what they call your monthly disposable income, multiply it by 12, and then they add whatever equity you have in your assets. That final number, that's your minimum offer. That's it. There's no negotiating below that number, period. But here's the catch. This is the big trap. Disposable income isn't your disposable income. No, it's what the IRS decides you should have left over. They could not care less that your car payment is $800 a month. If their national standard says it should be $400, then $400 is the number they use. You pay $2,500 in rent? Too bad. If their local housing standard for your area is $1,800, that's the number. They get to dictate your budget, not your actual bills. And if that whole income part of the formula doesn't knock you out of the running, the asset part, well, that almost certainly will. For most people, this is a truly brutal reality check. First up, your assets. You see that $100,000 in home equity you've worked so hard for? Well, to the IRS, that's $100,000 they can collect. So it goes straight into the formula. How about that 401k you've been carefully building for retirement? If you've got $75,000 in it, the IRS counts it. From their point of view, that money is right there on the table. And it doesn't stop there. Even the equity in your car matters. If your car is worth $8,000 more than you owe on it, guess what? That amount gets added to the pile. You see how this works? All of this gets added up, and it creates a minimum offer that is way, way higher than the pennies on the dollar you were promised. So who in the world actually gets approved for these things? The IRS officially has 3 ways to qualify, but look really closely. About 95% of all the successful offers fall under just one of them. It's called doubt as to collectability. That name says everything you need to know. To qualify, you have to prove with cold, hard math that you are completely broke, and not just that, but that you're going to stay that way. All right, so if the offer in compromise is pretty much a dead end for most people, what are your real options? Let's talk about the practical, legitimate ways to handle a serious tax debt. First, you need to understand this. The official approval rate for an offer in compromise is only about 25%. That means 3 out of every 4 are flat out rejected. It's a last-ditch effort for a very, very small group of people. It is not a common solution. So your real practical options are usually one of these 3. First, an installment agreement, which just lets you pay what you owe over a longer period of time. Second, currently not collectible status. This is for people who truly have no ability to pay anything right now. And third, penalty abatement, which honestly can often provide more financial relief than a failed OIC ever could. I want to leave you with one simple thing. One question. It's an incredibly powerful tool that will absolutely protect you from these predatory companies. See, the offer in compromise has been turned into a marketing gimmick. That promise of settling your massive debt for just pennies on the dollar, it sounds amazing, but for almost everybody, it's just expensive theater. So before you sign a single document, before you hand over a single dollar, I want you to ask them this direct question. Can you show me the math? Make them sit down and walk you through the IRS's collection potential formula using your real numbers. If they hesitate, if they try to change the subject, or if they just refuse, you walk out the door. It's the only way you'll know if you're buying a real solution or just a ticket to a very, very expensive show.